3% other fixed income securities. According to Data Lend, the global securities lending industry generated $1.06 billion in revenue for lenders in May 2023. This represents a 15% increase from the $923 million generated in May 2022. This shows the huge potential available in securities lending transactions. Domestically, Nigerian Exchange Limited (NGX), in response to the need for market and product development, continues to be innovative, hence the introduction of securities lending in December 2015. Since the securities lending and borrowing services was officially launched in the Nigerian capital market, uptake has been quite slow. There has been a dearth of transactions since 2022 till date. This is a steep decline from the figures recorded in 2020 and in 2021. In 2020, market recorded securities lending transactions worth 95.2 million naira, and the value of the volume of securities was 7.4 million units. While in 2021, we saw a 439% improvement in the value of transactions to 513 million naira. Despite the long current drag, we are hopeful that there will be a rapid positive turn of events for securities lending landscape. One of the pointers to this assets of the one of the pointers to this is the ascent of the immediate past administration of President Muhammadu Buhari to the Business Facilitation Act 2022 on the 14th of February 2023. Significant amendments were made to the Pension Reform Act, Section 89(2), which now allows pension assets to be eligible for securities lending subject to guidelines issued by the National Pension Commission. This amendment presents opportunities in the securities lending landscape in Nigeria for institutional investors, such as the PFAs. In the light of this, NGX and PENCOM will closely collaborate to deepen this space for the benefit of the RSA holders and the pension industry at large. The immense advantage of securities lending cannot be overemphasized, as it presents significant benefits to investors in a bull or bear market, either as lenders or as borrowers. It also gives investors more options to take different views on the market. It is vital in the development of the capital market by providing liquidity, which in turn reduces the cost of trading and promotes price discovery. I believe today's facilitators and panelists will have more on this for the benefits of our esteemed participants. Finally, the potential for securities lending in Nigeria remains immense and is likely to expand over the years, underpinned by new markets, products, and healthy investors' appetite. The exchange, no doubt, remains keen to provide an efficient and liquid market for investors and businesses in Africa to save and access capital and investments. We promise to continue our collaboration with all market stakeholders to collectively contribute towards the enhancement of securities lending transactions and ultimately towards the growth and development of capital markets in Nigeria and Africa at large. I thank you all for listening, and I promise you an engaging session. Thank you.
Thank you very much, Mr. Juchemeka. Thank you for the very insightful opening remarks. And thank you for also speaking to the potential of securities lending in Nigeria. I mean, I especially enjoy that you have also emphasized that this is the reason why NGX has convened this forum to enable market participants harvest and leverage the impact of securities lending in Nigeria. We would now move very quickly to the next item on the agenda, which is to take the presentation from Ms. Ronke Ayegbajeje. She'll be taking us on the benefits of securities lending, strategy for portfolio optimization. Ms. Ronke Ayegbajeje is a relationship manager at Stanbic IBTC Nominees. Ms. Ronke, you have the floor now. Thank you. Ronke Ayegbajeje. Hey. We would now be taking the presentation. I think she's ready now. Ms. Ronke Ayegbajeje will be taking us on the benefits of securities lending, strategy for portfolio optimization. Ms. Ayegbajeje is a relationship manager at Stanbic IBTC Nominees. Ms. Ayegbajeje, you have the floor now.
Good morning, everyone. Apologies, my network is a bit unstable and didn't see that. I'm going to start sharing my screen and I'm going to talk through securities lending in Nigeria. Thank you. Jude opened the floor for me. And
it's on. Let me quickly put on my apologies, everyone. Hello, can you hear me? If you can hear me, can you please put this in the middle screen so that we can quickly go straight to Okay. Thank you so much. I guess I'm going to try and quickly change my background to the. Let me choose a very quick. Virtual background, yes. I need to comply. Okay, this looks like it. Okay, I'm sure. Can anyone hear me? Madam Ronke, good morning.
good morning. Apologies, my network just went off.
Sorry, it just started raining in some part of the city and the network just started misbehaving.
Oh,
so I've been trying to, yes, sorry. Everyone, apologies everyone for starting this rather late. If I have the the backend team ready, then I think we can all have a go. Is that possible? Please kindly indicate before we go live.
Sorry, boss. Ronke was about to go. Ronke was about to make a presentation.
Okay. You want her to go ahead and make a presentation?
Yes.
Okay,
Yes.
go ahead.
Thank you.
Ronke, thank you very much. Please go ahead.
All right. Thank you very much. Please do let me know if you can see my screen now.
Yes, we can see your screen.
Okay, thank you very much. So today we're going to talk about the concept and the purpose of securities lending. We're also going to talk about the parties to a securities lending and borrowing transaction. We're going to talk about the benefits and the risk, and we're going to talk about key terminologies for securities lending. Securities lending is the lending and borrowing of securities, simply put. It's a loan transaction, but with securities involved. So you are lending and borrowing securities, unlike the typical transaction where you borrow cash, what most people are used to. For securities lending, what you do is you borrow securities, and at the end of the transaction, we return the securities you have borrowed. So I know that so I'm going to talk about the process for borrowing securities, what a typical securities lending transaction would look like. So first, must be a lender, and then there must be a borrower, and in between will be the securities lending agent. The process is usually that a lender makes securities available for lending, and then the borrower who is interested would then talk to the lender, and talking to the lender can be through an SLA. So what the lender does is they have securities available, the borrower checks the available securities, and they indicate their interest. The SLA, they have about 5 SLAs in the market. Stanbic is one of them. So Stanbic midwives the transaction between the borrower and the lender in the market. When the borrower comes to borrow securities, they need to have a collateral, for the transaction. So for instance, a lender has securities and they want to borrow those securities, they want to lend it out. A borrower will come and then pay the collateral. In Nigeria, the collateral for securities lending is for cash is 120%. For equities is 130% head cuts. That is, if you are dropping cash as collateral, you pay 120% of the value of the assets you are borrowing. And if you are using equities as collateral, you do 130%. If you are using government securities like the government bonds, the sovereign bonds, and the OMO bills and T-bills, you would be dropping 125% collateral. After this is agreed, the borrower pays the collateral, and then the securities lending agent transfers the security to the borrower. Usually, there are 2 types of terms for securities lending. You can do an open securities lending, or you can do a fixed term securities lending. So an open one is like a call securities lending arrangement where you are borrowing for an unspecified time, can be 1 week, can be 2 weeks. And once you agree on that, the transaction is then executed. I'm also going to talk about the parties to a lending agreement. We know that the lender is the one who makes the securities available. They are the owner of the securities. We have the SLA, which is Stanbic in this case. We have intermediary agents, and we have the borrower. The borrower is the person that wants to, borrow those shares, perhaps to short them in the market. And the lender is the one who actually owns the beneficial owner of those securities and wants to lend it for some temporary gain, and they are going to get their securities back. The securities lending agent midwives the transaction. The securities lending agent is a borrower to the lender and the lender to the borrower. And in this arrangement, there can also be the intermediary agents. Intermediary agents can be a stockbroker who pulls together
Apologies, I guess we lost Ronke there momentarily from Stanbic IBTC nominees. Ronke, I'm sure she's going to get her internet connection back. It's been a little bit patchy this Wednesday morning, but of course, thank you, Ronke. Okay, you're back. Thank you so much. I guess the internet's been a little bit tricky on some of our sites this morning. Thank you so much. Please go ahead. We're enjoying that presentation. Please.
Apologies for the network. I'm going to just share the screen again, and please do let me know once you see the screen.
Please go ahead.
Okay.
Okay, yeah, we can see you.
Okay.
Exactly. That's where you are. Thank you.
Okay. So I was talking about the intermediary agents. The intermediary agent is an institution that has been licensed by SEC, and that's permission, authorization from NGX to pull together assets from individuals, from individual lenders, and they also have the permission of the lenders to use their securities in a securities lending and borrowing transaction. So for intermediary agents to operate as intermediary agents, they must be registered with an SLA as well. Moving on to the next slide. We talk about the advantages of securities lending for different parties. So why should I do securities lending? Why should anyone be involved in securities lending? For the lender, they make an additional income. And I'm alluding to what Jude said earlier, that
Okay,
security, yes,
please go ahead.
1.6 billion, $1.06 billion was made, this year, as opposed to last year, where just over 900 was made in securities lending for lenders alone. So lenders made that amount. So that means there's the opportunity for people to, make more money, for lenders to have additional income. Imagine your idle securities making money for you. So that's the advantage to the lenders. And then it improves, for the whole market, it improves market liquidity, and it improves the volume of securities that are available in the market for trading. Also, for the intermediary agents and for the SLA, it provides additional income and increased business volume and throughput. For the borrower, it provides market making opportunities. You get additional income, and you can short sell, and you also have arbitrage opportunities to make a lot of gain. So imagine the money that was made from securities lending last year alone, over $20 million globally from securities lending. Moving on. So we're going to talk about some of the terms in securities lending. We'll talk about the transfer of title and the manufactured dividend. Perhaps one may be wondering what happens to securities when the lender, lets out their security to the borrower. So what happens is that the borrower once the securities goes to the borrower, the lender is unable to receive dividend directly or vote on the security like they would normally do if they were holding the securities. But one of the things that is included in the agreements for securities lending, that's the GIMSLA, which is the Global Securities Lending Masters Agreement, is manufactured dividend, which means that when when someone is supposed to receive dividend or a payment or a coupon payment on the security they have lent out to a borrower, the borrower makes them good. That means the borrower pays them the dividend they should have received. So a lender should not worry that they would not receive the economic benefits that should accrue to them because they have borrowed their securities. They would receive the manufactured dividend at the end of the day. To talk about transfer of title, once the security is lent out, the legal title passes from the lender to the borrower, but any benefits arising from corporate actions or dividend payments are retained by the owner, except voting, as stated in the Global Master Securities Lending Agreement, recognizing as a master netting agreement in terms of Insolvency Act. The borrower owes corporate rights and the lender owes the contractual rights. Moving on, we'll talk about securities lending is not without its risks. There's a risk, like with any business, there are risks attached to securities lending transactions. And, risk management starts with risk identification. So once you can identify the risk, then you know how to mitigate it. So some of the risks involved in securities lending are counterparty risk, regulatory risk, market risk, delivery and settlement risk. So for each of these risks, for each of these risks, there's a way to mitigate them. For example, the market risk where price moves, you are able to mitigate that by getting the collateral. So once you get the collateral, and once you get the collateral, you are mitigating against the price movement. And there's also something called mark to market. It's a system that allows you to know what level whether the collateral you have covers for your borrowings. It's something that the SLA does and then sends this to the borrower every day to ensure that the collateral is adequate, so this is mitigating the risk that prices will move so much and the lender would lose their security, or that the borrower would not be able to pay for those securities anymore. To register as an intermediary agent, I think I spoke about it before. You would need to be a registered member of the SEC, and then you need to also get license permission from NGX. I think I would like to stop there to entertain questions. Thank you very much.
All right, thank you so much, Runke Ayubajeje from Stanbic IBTC Nominees. Thank you so much. We appreciate that presentation, quite detailed, walking us through what is expected in the securities lending market. But again, it's all a lot of a whole learning curve for everyone, all parties in the value chain, but again, to understand the risk and the reward metrics that are involved in this type of market transactions that are available. Of course, we're going to take a few more. I'm sure more questions will be coming. Questions will be coming your way. I have one or two questions of my own, but I think we need to move on very quickly. Ladies and gentlemen and distinguished participants, we appreciate everyone, the SEC, the NGX, and all parties, the PENOP, the Cardinal Stone, as well as other parties who are part of this particular securities lending event put together by the Nigerian Exchange Limited. Let's get on quickly to hear and add what we've learned from Runke, from what Peter Omorige, the CEO and Managing Director at Cardinal Stone, will be bringing on in his own presentation. We'd like to hear from you about the products that's available and how we can add a whole lot more value to what Ronke has just presented. Good morning, sir. Great to have you on the show. Let's move on. Thank you so much. You got the floor.
Good morning, Boston.
Thank you so much. Thank you.
Good morning, everyone. It's a pleasure to be here. So as intermediary agents, I'll be making a short presentation on, what is obtainable from us as intermediary agents. 1 second, please. A lot has been said about securities lending, and it is just to reiterate what has been said. It is making available shorting in our markets, basically, which is borrow and sell. You can borrow stocks and sell. So our market changes from a long-only market where you only buy to where you can also sell, where you don't own those securities. So you can borrow stocks and sell depending on your position and take advantage of bearish market. So you think market is going down, you've done your research, you've done your analysis, very important actually. And you think, you want to borrow stocks and sell. Also, it makes available an opportunity for lenders. You're long only, we listened to Jude, he spoke about the opportunities and the regulation that allows PENCOM to, lend securities. So PENCOM or the pension funds are typically long the market. So now they have the opportunity to make money on those equities if they don't want to sell it. And also retail investors have the opportunity to, who are also long only, who probably have a dividend focus, any income over time, to say, okay, while I have this stock, while I have these shares, I'm happy to make something of it. So it's not just there sitting idle, and you get your dividends and you get whatever interest comes with it. Ronke spoke about the benefits. I would just like to also reiterate, like I said, borrowers can make money in the bearish markets. Also hedging opportunities. So you can be short a certain security and long a certain security, depending on what you think valuation is. So you think one is valued over the other, you sell it, and you can go long the other one. So, and also if you think as an investor, you see certain stocks, you think valuations are through the roof, shouldn't be where they are, you can also borrow and sell. And as a lender, like I mentioned, you can earn interest on your securities while still enjoying the corporate action. So the part of the agreement, like Ronke mentioned, is that you will still receive the corporate action that comes with owning those securities. What you only lose in this case may be voting rights. Yeah, you lose the voting rights on those securities, but every corporate action you will still get, and also you retain, upside potential. That means the short seller is losing. And for the market, Jude rightly mentioned price discovery, very important and very good for the market. Also increases liquidity in the market, which is also very good. And opportunity for, for other strategies. So you can have more diversification strategies. Like I said, the market moves from long only. For then, you can now short the market, which is very important and very good for global markets. If you've been following global market, you see what happened with SVB, how it happened, how it went to other, regional banks. If you follow global markets, you see what happened with Hindenburg Research, where they called shots on Danning, where they called shots on Kalaikan. Kalaikan even had to cut dividends at some point. So it opens up a different market for the market in general. So it makes the market more robust. People can now look at a different part of the market, which is now giving recommendations to sell some certain securities. Has its flip side, not so good, but the positive about it is that it widens the market, it deepens the market, it increases liquidity, and helps in price discovery. So which is very good. So we as intermediary agents, if as a client or as an investor, you approach us to say, you want to be involved as a borrower, you want to borrow securities and sell, there's certain criteria, one of which is the global securities lending agreement, which must be signed. You sign that agreement. The minimum value of securities you can short with us will be 10 million naira, maximum value for now, 500 million naira. Then for now, we have the tenure at 60 days. Around corporate actions, what we'll typically do is actually to close the position, when there's a corporate announcement or a corporate action, because it's not so sure. We don't know how that goes, and that's some risk management policy we put in place to say corporate action or merger acquisition will typically, ask that you close such positions. Corporate actions, dividends, that is also quite complex. may also require that, you close that position, because we want dividend to accrue to the lender and not have to chase you for payment of those dividends. So imagine a dividend is being paid and, you have your collateral that we deduct it from your collateral, or do we ask you to bring in more money? Where you don't bring in more money, what happens? So from a risk management perspective, we said, when there's a corporate action, we'll typically ask you to close that position, but that's subject to market changes. As the market develops, as the market moves forward, we'll probably look at how we can manage that better. Collateral value will be 1.2 times the facility amount. So if you are looking to short just 10 million worth of securities, you have to provide collateral of 12 million. And collateral will be, for now also, will be near cash instruments. So cash or near cash instruments. Again, I know Ronke mentioned equities, but from a risk management perspective too, we've also put this in place just to be certain and be sure that we're able to manage this. So mostly cash or treasury bills, near cash instruments. As market also evolves, we'll see how we can accommodate more other instruments, more volatile instruments. So bonds are very volatile, and the likes treasury bills, money market instruments will be, where we sit today. And also you earn an interest on, the collateral. For now, that's also subject to market changes, 18% as a borrower. As a lender, like I said, you have your securities, you have nothing to lose. You are long focused. Your income, probably income focused, and you have a view, of just sitting in the market, of just holding securities, which is a very, decent strategy. Buy over time, maybe your view, you're investing for the future, so you're long only. You can come to us to say, okay, you want to lend your securities, minimum value still remains the same, tenure 60 days, and lending rates around 6% per annum, but that's also subject to market changes. Interest obviously accrues daily. Just the representation of what it is. You come to us, come to Cardinal Stone and say you want to borrow securities. We'll confirm securities are available. We're signed up with the securities lending agent, Stanbic. Check with them, are these securities available? We come up with the agreements, which we will share with you. There are guidelines to borrowing securities. We have the agreement we share with you. You can also go to the exchange, for the agreements they are available. You can check. So, you check the agreements, you agree to it, you sign up with us, you get the approvals. That, like I mentioned earlier, there's a 2% charge, which the security lending agent takes from start, and 7.5 VAT on that. That is also taken. You also move the collateral to us before the shares will be made available to you to sell in the markets. Accrued interest is charged. And again, like Ronke mentioned, the account is monitored at mark to market. Hopefully nothing goes wrong and you're good. At the end of the period, when you're comfortable, we close the position and the short is unwound. Same for the lending process. Shares are moved from your account to the securities lending account. Of course, you sign the agreement to make the agreement available to you. You sign it, understand it. You can seek the third party, knowledge or whatever it is. Then we short the securities. You get your interest monthly. Interest is paid monthly to the lender. Dividend is also, like we mentioned earlier, you get your dividends as a when they announce payment dates, you get those dividends. And if you want to terminate at that point or whatever it is, you terminate or renew the facility. So that's the basic process, just a top process of what the securities lending is about from a borrower and lender perspective. I would like to say it's very interesting, very good, but there's possible downside and, like Ronke mentioned, some risk to it because I'll just say understand markets before you go into this. Understand the securities you want to short. Understand the nuances. Shorting or lending securities or borrowing securities is tougher than going long. For those who have had the opportunity to do stuff like that, you have to understand the nuances involved, the technicals, fundamentals, and the likes. Okay, so this was just some FAQs. How you can short your securities. Whether you get your dividend that we've all mentioned. I've spoken to all of this. Yeah, so that's it basically. Thank you.
Great, so great. Thank you so much, Peter Omorige, the Managing Director. Hold on a second, Peter. Very interesting presentation. Will you just come back very quickly? I see a couple of questions in the question box, and I just want to ask this very quick one and short one before we go to the first panel. Is there a difference, if there are, quickly put it out to us, the difference between securities lending and short selling?
The major difference here, in foreign markets, you're probably putting up a small margin. The major difference here is, well, for us, we're taking 1.2 times collateral. So it's not so naked short selling. Yeah, it's somewhat covered. So we're taking 120% of the value of shorting. In foreign markets, you can naked shorts. Yeah, so that's just a major difference, but there's no other difference.
Yeah, with naked shorts, you don't have that cover. So whatever comes in, there's no umbrella. You just fall through in the manner of speaking.
Yeah.
Okay, so okay. Just to clarify that. Thank you so much, Peter Omorige, the Managing Director and CEO at Cardinal Stone Securities. Thank you so much for being one of the market participants. And it's all laid out that the process, weighing the risk and the benefits, quite a whole lot, expanding the horizons of the Nigerian market to the NGX Limited. Let's get on that. Very interesting. Let's move on now to to this panel, and this will be very interesting because again we're going to have more diverse voices coming in through for this end of the conversation. Let me quickly introduce my panel, the panel that is coming up right now to deepen this conversation for us. And first, I'm going to mention the panel actually will be moderated by Simi Ojumo, who is the head of sales at Absa Securities. If you're in the room, please, could you please show up on the in the video box? Here we go. It's good to see you, madam. Good morning from here. Hello, madam. Just press the button. Thank you, madam. Yes, now we can hear you loud and clear. Thank you so much. This is your panel, and what I would try to do is to let me hand over to you to formally introduce members of the panel.
Hello, Boston. That's not Miss Simi Ojumo. That's Miss.
Oh, that's
Miss
okay. That's a Franca. Oh, Franca. Franca is joining us from the Securities and Exchange Commission. You'll be representing Mr. Abasi, who is unavoidably absent. Thank you so much for coming through. Sorry, I just saw that, Franca, from the SEC. Thank you so much. I'm trying to find out if we have the moderator for the this particular panel to come into the room. By the way, that's Simi Ojumo. But let me quickly introduce other members of the panel. The CEO of PENOP, the Pension Operators Association of Nigeria, Mr. Oguchi Aguda. Thank you so much for being part of today's securities lending market. Okay, if you can come in into the video wall, I would like to see you, Mr. Oguchi Aguda from PENOP. Thank you so much, bringing the pension market industry in Nigeria into this very important market conversation. Then, of course, Mr. Ibrahim Kangiwa, the head of investment supervision at PENCOM, and that's on the regulatory side. We need to see what the pension industry is bringing in from there. Then, of course, the CEO, of course, of Stanbic IBTC Nominees, Mr. Abatunde Majiyagbe, as well as Peter Omorige, who just finished his presentation, the CEO and Managing Director at Cardinal Stone Securities. Then, of course, from CSCS, Ms. Onome Komolafe. Thank you so much, all of you, for coming in through. Let's get this. Okay, I've got everyone here. Alhaji Ibrahim, thank you so much. It's good to see you from Stanbic IBTC Nominees. Thank you so much, Babatunde Majiyagbe, the CEO. Isaac, sorry, Peter Omorige, it's good to have you back. Then Onome Komolafe, thank you so much. I'm trying to get to the moderator for this panel from Absa Securities to join us, but this is as good as this cabinet can be. You have all been screened and all confirmed to be part of my first panel. So let me hit the ground running. I think Oguchi hasn't come logged in yet. I haven't seen him in the video wall. Oguchi Aguda of PENOP is the CEO. Okay, I think Oguchi would join us. Let me yield to the floor first to the Securities and Exchange Commission, if you don't mind, ladies and gentlemen. Let's hear from Franca Ebube from the SEC. What's the regulatory helicopter view of securities lending markets? Let's hear from you first. Then, okay, Oguche, good morning. Good to have you. Thanks for coming through. Okay, Franca, you have the floor from the SEC. Let's have that view first.
Yeah, thank you for the question. Good morning, everyone. The Securities and Exchange Commission has continued its dual mandate of regulating and developing the Nigerian capital market. Hence, is committed to maintain fair, orderly, and efficient market and protect the interests of the investors. The new provision of the Business Facilitation Act, which enables the PFAs to participate in the securities lending transaction, we no doubt enhance the market, deepen the market, create more activities, and increase liquidity. The Commission in 2011 developed rules in this regard with respect to securities lending transactions. We have the general requirements for securities lending transactions. For example, we have the lending agreement between the lender, the lending agent, and the lender, and also a separate agreement between the lending agent and the borrower. We have the charges, fees for lending. We also, for depositing/lending, we also have the treatment for dividend payments and other rights with respect to the agreement. We also have the arrangement of dealing with corporate actions. These are some of the general requirements. Also, the provisions of the rule also provides for other requirements for securities lending transactions. For example, with respect to the lending agents, they are expected to maintain adequate records at all times with respect to securities available for lending, securities lent, attach collateral, value of collaterals, as well as returns of loaned securities. Furthermore, our provisions of the rule also provides for collateral management. We also stipulate the accessible forms of collateral, such as which are restricted to cash, FGM bonds, money market instruments, as well as listed equities in the securities exchange. The rule also further provides for the process of securities lending transactions, as well as settlement cycle for securities lending transactions, for the settlement of securities lending transactions, which is T+1. Finally, the rule also provides for the criteria for eligibility as a securities lending agent. As of 2012, the Commission issued licenses to 12 lending agents. Of course, the most active securities lending agent as of today is Stanbic IBTC. So we have criteria for registering those securities lending agents, as well as their obligations and responsibilities. They are expected to comply with the provisions of the Commission's rules and regulations, abide by that with respect to securities lending and borrowing. Thank you.
Okay, thank you so much. We really appreciate that. Frank Ebube from the Securities and Exchange Commission. Thank you. We understand that very well, what is coming through. But let me also quickly, it's always good to hear from the regulatory side of things. So let me ask Mr. Ibrahim Kangiwa, who is the head of investment supervision at PENCOM, to give us just about a minute, very quickly or two, of what the regulatory side of things look like from the PENCOM side, from the pension industry. Then, of course, we go to the industry practitioners who are in the room.
Yeah, thank you, boss. Good morning.
Good morning.
As you know, Section 89 of the Pension Reform Act 2014 has a provision regarding restrictions on sale and borrowing of pension assets. So this had been a major encumbrance for security lending. with the passage of the Business Facilitation Act 2023, it has actually now enabled us to proceed with developing guidelines towards enabling securities lending. This is something that has been actually in the radar of the Commission. We've been looking at it, but because of the prior provisions of the 2014, we could not actually proceed. Coincidentally, we are looking at the investment regulation that guides the investment activities of PFAs. We are trying to update it and amend certain aspects of the regulation to broaden the available assets and also deepen it in terms of what is on offer for PFAs. We know the current challenges in the business environment. We know the issues with inflation, currency. So we're trying to diversify the investment space. So it's a very good time to also include securities lending. What we are doing is we've actually had engagements with the NGX, with other stakeholders to better understand and dimension how it's going to fit into the broad spectrum of the investment activities of the PFA, and also ensure that we put in our own internal risk management measures within the regulation to, the nature of the scheme is contributory and the contributor bears the risk. We're not saying that once you are investing, obviously you are taking risks, but those risks have to be understood. They need to, to understand what you're doing and put in the required mitigants. So the plan is currently we are doing our own in-house due diligence, in-house processes with the regulation. Once that is done, we're going to expose the regulations to relevant stakeholders for comments, inputs in our usual way, which is consultative. Once that is done, we'll issue the regulations and it will become effective. So in terms of timing, we expect to be done with this before the end of the year, hopefully.
Ibrahim Kangiwa from Pension Commission of Nigeria. Thank you so much for those insights into what you're doing on the PENCOM side. We heard from the SEC side. So let me ask the Managing Director and CEO at Stanbic IBTC nominees about today. Maji Yagbe, just one or two questions. Very, very quickly, when we talk about the business facilitation, the act that was signed into law by former President Buhari in February last year, just about a year ago, that was to ease of doing business. So can you provide some insight on how this Business Facilitation Act would improve market liquidity in the equities market and impact on RSA holders?
Thank you very much, Boston, and good morning or good afternoon to all who are joining from wherever in the world. I guess, first of all, I would like to thank all players in the securities lending market for the continuous advocacy in driving efficiency in our nascent securities lending and borrowing market. Since when the idea was conceptualized in 2011, 2012, to when we had the first transaction in December 2015, there have been several changes on how the product is being offered in Nigeria. And this, I must say, is an opportunity for me to appreciate all the stakeholders as well as the regulators for ensuring that we have what we call a more formidable securities lending framework that can birth efficiency and opportunities in the market. We've had several changes in the Finance Bill 2018, 2019 on frank investment scheme or frank investment income, as well as manufactured dividend interest or payment, as you may call it. And most recently, like you alluded to, Boston, the engagement with market participants such as the PENCOM, CBN, the SEC, the NGX, PENOP, PFAs, the Ministry of Finance, and of course the National Assembly, and Stanbic IBTC for advocating for the introduction of the Business Facilitation Act. In clear terms on the question, how the provision of the Business Facilitation Act would improve market liquidity in the equities market, I think by efficiently increasing the supply of securities that can be short or supply of securities available, it clearly bets for and brings for lots of liquidity in the market. The securities lending in itself improves that market liquidity and enhances price discovery, like Peter said in his earlier submission. Previously and historically, the securities held by PFAs are held long until when securities appreciate in value before they are sold. With the advent of securities lending, there's an opportunity, like my colleague Ronke said in Stanbic IBTC, where whether the securities appreciate or depreciate, or whether the position is bearish or bullish, there's a place and room for opportunity as a whole. This introduces more activities within the market. There's more buys, there's more sales. The brokers make more money. The NGX makes more money. The SEC and the commission makes more money. And of course, the underlying clients, including the RSA holders, are positioned to make more money, given that the pension fund will come into play as a lender. In terms of other positive impact to RSA holders, I think the fundamental principle around the fund type, which in the wisdom of PENCOM, the Fund 1 to Fund 4 should remain unchanged, given that Fund 1 is the most agile and most risky and brings better, additional investment returns for investors who have chosen that fund, up to the last, which is the Fund 4 that speaks to the retirees. I guess within that band and that bracket, there are lots of room for opportunity for pension fund players or RSA holders to be able to choose to play within the securities lending space. But going back to your question directly, allowing pension fund, which is the biggest fund arguably in the market today, with almost 15 trillion in assets under management, would help spur significant growth and liquidity within the space. And with this forum and other forums and engagement we'll be having with PENOP, PENCOM, and other players, as well as the PFCs, I'm sure we'll be able to get to that point quicker than later. Thank you.
Oh, great. Thank you so much, Abatunde Amajiagbe, the Managing Director and CEO at Stanbic IBTC Nominees. Thank you so much. And it looks like everyone else in the value chain is making money except myself, because you mentioned everybody there making money here and there. Everybody is happy. Now, I want to be part of the happy team, and I can see all the smiles around the room, including from Oguche Aguda for PENOP. But quickly, as the saying goes, never send a man to do a woman's job. Simi Ojumu is in from Absa Securities. So this is your job, by the way. But I want
thank you, Bossy. My apologies. I don't know what went wrong. But I'm in now.
Something will get wrong sometimes. We all know that. But again, thank you so much for coming. We appreciate that, and all our participants appreciate it. This is your panel, but first I want you to please weigh in this conversation on this panel. What do you bring in from Absa Securities as far as the intricacies, the risk benefits? Just give us about a 1 minute, 1.5 minute, 2 minutes cutting razor as far as securities lending is concerned, looking at the wider and bigger markets such as the South African market.
Well, I think, look, for starters, Nigeria still has, some way to go. So this is a great initiative and a step in the right direction. And it does show that we are beginning to open ourselves up, especially more internationally than we have before. I mean, of course, as you know, Absa is, a business across, especially based in South Africa. But that being said, I sit in Nigeria in the Nigerian business. So I'll say for this purpose, I'm in Nigeria and I'm representing the Nigerian market. I think it's a great initiative. I know there are a few questions around how many security lending agents do we actually have currently, which the NGX will probably speak to later. And, a few more initiatives. I mean, I guess as we go along, I would also, push with the FMAN and other players in the market to see what's going on. But for sure, it's such a great thing on our side. We hope to be able to take advantage of the opportunity in that space as well.
All right. So take it from there, Simi, from me. let me just lay back and enjoy, because I'm sure there's a whole lot of more digging deep that we've heard from Babatunde from the SEC and Pencom, by the way. I'm sure Oguchi Aguda is hanging in there because he's the man.
That's
right
who I'm going to go
market.
to next. Yes, that's
who
I'm going to next. So, Mr. Aguda, it would be nice to hear from you. And in this context, you're speaking on behalf of PFAs, you know. Do you think that PFAs are willing to engage securities lending currently? And what are the bottlenecks you've identified? You know, what are the concerns that have been raised? It would be nice to hear from you from, you know, the PFA's perspective.
Yeah, thanks, Simi. I think I could give a long answer and a short answer. The short answer is no. They're not willing to, or yes, whichever way. But before I just go into the long answer, I just want to commend the previous government for passing the bill. Also for NGX, they've been knocking on the door for a while, and some of the market players, just to be able to get this through. So that is good. And I like one of the things Tunde had said: more money for everyone, money for the PFAs, money for the RSA holders, and we're all for more money. The PFAs are all for more money. So of course, you know that because most of the securities they hold them long, so they will like to do some more with it in terms of if they can borrow, if they can lend and make more money. I mean, they'll love to do that. I know Peter had said something about 6% per annum, but his presentation said 18%. I don't know which one, but I'm sure we will like 18%. Also, Divisional Head Jude had said about 1.6 trillion, but EMEC had said 1.6 billion. I don't know which it was, but again, we will like trillion. So essentially, the PFAs would like to make more money from the securities they hold. So since the pension scheme started, we buy and we hold. We buy long, you know, and for us, you know, we would like to make more money from that we hold, because we are typically long-term investors. You know, someone said, who are we selling to? We are selling to ourselves. Who has the muscle to be able to buy those securities from us? It's ourselves. So typically we hold long, and what we need to do more is to see how we can influence the companies we invest in, because we are there for the long term. But whilst we are holding those securities, how can we make money from it? And securities lending is great. You know, that's on the positive side. On the flip side, Peter mentioned flip side. There are flip sides, which is the risk. And, you know, as Pencom had said, you know, we also need to think of the RSA holder. So what is the risk management process in place? Who are the players in place? What's the framework in place? How is the NGX structuring? What does SEC have? You know, how do we deal with infractions? You know, so the PFAs wants to be sure that the market is transparent. You know, if there are infractions, it's dealt with quickly. And that will give them the confidence to be able to do it, right? That's one level. Another level is the fact that, you know, we always try and brush the PFAs with one brush. So there are probably some PFAs that will want to say, I love this, I'm going to go ahead with it. And there are some that say, you know, I don't want to go ahead with it based on their investment strategy. And that's fine, right? People can move cross funds, like Tunde had said, whether, you know, from fund one, which takes more risk, or fund four, retirees less risk, or even move within PFAs. But I think, you know, overall, I think this is good for the markets, good for the PFAs, good for liquidity, good for the RSA holders, you know, but I think it's in the how. How do we get around this? Knowledge, understanding is very important. So kudos to the NGX for organizing this. And we need to organize this more so that more people can be aware. The people in the back office, in the PFAs, the risk managers, so that this is more mainstream. You know, I do remember when the bond market started, it was still assets, but now, you know, everybody knows how to trade bonds. It's the same thing with this. So I think at the early stage, we might not see a lot, but in the long term, it's good for the market. But one key thing will be, how do we get this off the ground? And I'm happy with this. So that's a long answer.
That's a long answer, but thank you very much, Mr. Oguchi. I'm going to go to Ms. Onome. Mr. Onome, it'd be nice to hear from you. You know what the CSCS is doing, especially in terms of, you know, settlement. Is it a different function for securities lending, or is it going to be done the way it's traditionally done? And, you know, also maybe just explain to us how the clearing and settlement aspect of securities lending will work.
Oh, okay. Thank you very much, Semi. Very good question. So I think your question is around how this settlement is done and if it's different from normal settlement. I would say yes and a no. Yes, in terms of the fact that the settlement for securities lending is done much the same way as other post-trade activities that are done at CSCS. It is standardized format. But of course, as you know, settlement requires certain activities pre-settlement and pre-trade. And so you find out that for securities lending, one, there's a detachment process, which is what we have to ensure. And one of the speakers had already mentioned that CSCS facilitates that detachment process. Secondly, also we had spoken about how when corporate actions happen, dividends are paid, we want to ensure that the lender actually gets value, and that's also have been pre-signed in the agreement. CSCS also ensure that the associated proceeds are directed to the lender. And also at the conclusion of the transaction, part of what we also do is to ensure that there's a seamless transfer of the securities back to the sender. In terms of how the process works, I think I pretty much explained that. The process would require certain pre-trade activities, which will be the detachment process. And that is what we will ensure that it's happened. And the detachment process involves actually transferring the securities from the position of the lender to the SLA and thereafter to the borrower. CSCS ensures that is done. We also ensure that when the transaction is unwound, securities are transferred back to the lender. The settlement, again, if there are trades around the securities, like I had explained earlier, the settlement will go through our normal standardized process. I hope that explains that very well.
Yes, that is clear. That is clear. Thank you very much, Mr. Nome. Now I'm going to go to Mr. Imokwede. And here, of course, you're speaking on behalf of, so to say, Fund Managers Association of Nigeria. So, what are the asset managers thinking? Why haven't we looked this way from 2022 to 2023? Why hasn't there been more traction for fund managers? It'll be nice to hear your thoughts around that, sir.
Thank you. Good morning, everyone. Well, I would like to say, really, it's there are several factors. I remember in a forum like this, I had spoken to the fact that there are opportunities in securities lending, and there are products around securities lending, and so we need to deepen our products in the funds managers industry. So primarily, I think it's really about a lack of awareness of securities lending. And this is probably one of the main reasons why fund managers have not really participated in securities lending. So for instance, how many clients or high net worth individuals, qualified clients whose securities you have access to also know about securities lending. So it's more about awareness and how we can create awareness in the market amongst our industry as well as the investors. So, take, for instance, the Securities and Exchange Commission Rules 13, Part G3, which speaks to the framework around securities lending. It provides that the lender shall deposit only those securities registered in his name or in the name of any other person duly authorized on his behalf with the lending agent for purpose of lending. And so this suggests for us that only discretionary portfolios can qualify for securities lending. And it is only when portfolios owners authorize that we can use their portfolios, that we can use them for this purpose. And that's when we as fund managers can do this. Also, if you look at it from the equity securities point of view, so only quoted securities can qualify for lending and borrowing purposes. And so this means even if a discretionary client is willing to participate in securities lending, only quoted securities can be used for securities lending. And so maybe we need to, it sort of may preclude some fund managers from participating in securities lending. However, having said this, you're quite right that from conversations here that it's an untapped opportunity for us in the market. So even things around regulatory uncertainty, because there's no, I've spoken to regulation around it, but I think that we need to sit down and this is on us as FMAN, sit down within our constituency and just create our own, create a framework around how we can participate in securities lending, because there's a lot of opportunities. Other problems that we might have is things around risk perception. So securities lending involves a degree of counterparty and market risk. And so sometimes participants in the fund managers industry might associate this, might not understand this risk or outweigh the risk to the potential benefits. But I do believe that as our market deepens and as we start to develop products, and there are healthy lots of products that we can use around securities lending, that we will see we will see better use of securities lending in the market from the fund manager's perspective. Hello?
Okay, thank you very much, sir. So we'll trust that you are going to push the conversations forward in that, in that space. Yes, we can hear you. Can you hear us?
Yes, I can. Okay, yeah. Thank you.
Can you hear us? We can hear you.
Yes, I can.
Okay, got it. Okay.
I don't want to.
All right, thank you. So I said we trust that you're going to push the conversations forward for us in that space.
Yes, and just to state this, we have actually started a conversation, and we are speaking to the opportunities around what we can do. But again, as long as we understand regulation around it, because I'd also said, look, we have our funds. We can, I know that the first presentation spoke to us buying, but we can also sell from that point of view in the market for short securities lending.
Okay, great. Thank you so much, Ike. I guess Simi is slightly disconnected there. Thank you so much, Ike, for that. We really appreciate what you brought in terms of the regulatory environment.
Thank you very much, sir. And then, Peter, Cardinal Stone, it'd be nice to hear from you. What are the challenges you faced so far?
Okay, thank you, Simi. I think Ms. Ike pointed at one of them, which is knowledge or information about this. So this webinar is very good. We have retail investors on this webinar, and we have market participants. Again, I think one of the major issues too was availability of securities. Considering the structure of our market and structure of listed companies, we have a lot of companies that are closely held, by owners. Then we have the pension funds who are also, who have a decent chunk. So the supply was going to come from somewhere, and we're happy that now we have PENCOM, PENUP, and we have that regulation that allows PENCOM come in, and provide securities. Then for some more low retail investors, it may be, collateral requirements. Yeah, you're going short, but you still have to provide collateral, which is 20% above the value of what you're shorting. So that may have also been, a hindrance to shorting securities. Like Mr. Watson mentioned, when it started, we had about 6 securities we could short, but as of today, it's just 1. But we know with this new development, we're going to have more securities, to short. So, it's to be good from here, I think. Increase liquidity and increase market participation. Thank you.
Okay, thank you, Peter. Just to be sure, can you hear me clearly?
Your line is breaking.
The line's a little bit patchy. A little bit patchy. I guess a bit patchy there. Simi, can you hear me?
I can hear you. Can you hear me?
Okay, yes, I can hear you. We're just waiting to get your video back in the in the gallery.
Okay, great. Is this okay now?
Yeah, coming up. Here you go.
Are we good? Great. Okay. And I think I would just like to round up, because there were a few questions in the box around collateral, and how the margin requirements are determined. So Stanbic, it'd be nice, Ms. T-Maj, for you to please, touch on that, please. How the collateral is, what kind of collateral is eligible, and then how is the margin requirements, determined?
Yeah, thank you very much, Simi. And I think that's a valid point. Peter touched on it a bit, and Ronke as well. But again, just to rehash that point, that it's based on regulation. So there's a regulation that speaks to what is acceptable based on the risk profile for each of the collateral types. So we have 3 collateral types that have been approved by the NGX and the SEC. The first is cash, of course. Cash is king. and the top up you need on cash is 20% above what has been shorted. The second is treasury bills and government bonds, and the top up you need on that is 25% above what has been shorted. And then the last is equities. Equities is 30%. Based on the risk framework in the market and based on what we do as a securities lending agent, similar to what position that has been taken by an intermediary agent like Cardinal Stone, we are not taking equities at the moment as a collateral type. So we're taking fixed income securities, we're taking treasury bills, and of course, we're taking cash. And why that is important is because you're looking at the risk profile of these collateral types. How quickly can you sell off those collateral? Should there be a default in the market, et cetera, et cetera? But again, just to put it in perspective, that I think given that we are in a phase in the market where we're happy to get things going based on the risk acceptance of the product, and also to appreciate the regulators for being amenable to different changes. For instance, the CSCS was amenable to reducing the settlement period from a T+3, T+2 to a T+1, in some cases T+0, depending on how quickly the collateral can be provided by the borrower. Again, that's just to show that every participant, especially the regulators, are happy to make key changes to ensure that the market kicks off. But back to your question, these are the three collateral types. In effect and in practice, we only accept those two collateral types marked up at 20% and 30%, 25% respectively. Back to you, sir.
Okay, well, thank you very much. And I'll just like Lisa to just round up finally with the risk associated with this. And then on that note, we'll take that as the closing comments from the panel, just the risk associated with securities lending.
Okay, quickly, Ronke mentioned a bit of it, counterparty risk, but for that is quite low. Now that will be low in this case because we'll do KYC, we'll know the clients, preferably clients who've been with us, so there might not be much of that. Also, there's market risk, liquidity risk. The structure of our market allows a 10% upside every day, and it's capped at that. So if there's new information on a certain security, there's a chance that you'll be closing your position at maybe 30% off, which is, big loss. So that is a risk everybody should bear in mind. Shorting is actually more difficult than going long. So you must do your homework before going short on a certain security. I must reiterate that, because we're closer to the investors and they take a beating now. We don't want anybody to be sad. Happy loss, take a happy loss if it ever happens. So there's also unlimited loss potential. Shorting as opposed to long, you can only lose as much as you put in. On rare occasions, you can lose 100%. But in shorting, you short the stock at 10, it's 20, before you say, this, and then anything happens and it's gone. So you can lose 100%. So unlimited loss potential. So we advise clients to do their homework, understand the fundamentals, understand the technicals in the name, understand the security you're shorting before going on this, embarking on this. Also, we saw what happened with SVB. I mentioned this earlier. And so I'm talking about the risk to the market now, where a certain securities, has some bad news around it, and everybody just goes haywire on the other types of that security. So bank, in our instance, comes out with a bad result, then, market participants just decide to short other securities, start looking at them. Yes, market will stabilize at some point, but it causes a run on the market, on the exchange. So these are some of the risks, as I said, with shorting. But like I said, counterparty risk, we'll do a proper KYC. For the loss potential, we always advise, stop loss limits. So we advise at 20-25%, we start knocking your door to say, don't you think you should close this position? It's not going your way. You better close this position so that everybody's fine eventually. Again, you deposited 120% of value of what you shorted. So we're comfortable around those levels, 25%, 30%. And we keep advising clients, always do your homework. Don't just short the market because someone else is shorting the market. Liquidity is an issue, in our market today. Not so many securities are that liquid. So also, I know that's a criteria too for securities that can be shorted. So those are some of the risks and some of the mitigants we will put in place. Would also guide and continue to guide investors on how to go about shorting securities. Yeah.
All right, so thank you very much, Peter. And then thank you to all our panelists, for joining us this morning and for all the insights. As always, this is the beginning of the conversation. It has to keep going till we get to where we really want, where we really want to be, where we can all have this money that we all want to have. So I'll hand over to you, Bosin, so you can take the Q&A session subsequently.
Thank you so much, Simi. Quite a great job you've done with your panel. Thank you so much. Let me just slightly behind schedule. Let me run just a few questions. But today, let me ask you, one of the participants asking, given the 10% limits, that the stock can go up on a daily basis on the Nigerian market, what happens if there's a short squeeze?
Yeah, I think Peter did justice to that question already. So on the flip side, I mean, you could lose everything, right? If you go short a security that you shouldn't short. So again, that this will depend on your homework as well as your research to determine what securities you feel will lose some share value within the next within the tenor that you want to take a position. So again, I think the onus is on the investor as well as the underlying holder of the security or the beneficial owner of the security to do that homework before they choose that security that they want to short. So they are likely, not likely, they can lose 100% of a position that they take.
Interesting. Thank you about today. But Peter, let me ask you, where do we get statistics on securities lending and short selling transactions? Where would that happen? Will be the NGX publishing it, or those of you who are intermediaries in the value chain?
The NGX will definitely be publishing it. NGX will be publishing it, so we could always end of day. I know prior to now, they used to, at the start of the market every day, it's sent on the exchange to say these are the securities available for shorting. And I think they will start doing that again once we have, once everything is good to go. But I think also we'll get daily information on shorting positions or the total value that's been shorted at the time. Yeah.
Okay, so just a quick question from me, Peter, on that. Once this information start going out, how does that impact on the movement on the share price of the underlying asset itself that's been used for lending? Do you think that will have potential impact to their upside or downside on a daily basis on the main market?
Yeah, so like we said earlier, it depends on the instrument you're shorting. So once what is this is information that will be available to everyone. So depending on the side you play on, if I know 20 million units is what is only available, for example, in GT Bank, and I know that shorts have taken position 20 million units. Someone mentioned the short squeeze. We saw what happened with GameStop, in America. The market, the so-called savvy investors were short, over the outstanding shares. And what happened? Retail investors came and they made serious losses. So the information as it comes out, everybody will use that information to determine what happens. Well, like I also mentioned, there can be a run on certain sectors at some certain time. But again, the market will find a decent level because longs and those who feel stocks shouldn't be trading at that level will come in, but again, it can cause, a bit of short-term pain to the long-term investors to see your stock is down 20, 30%. But then again, the market will stabilize and find a decent level. So what we mentioned, price discovery. So there will be decent price discovery because people can sell and people can actually buy. So in the long run, it's good for the market.
Okay, I'm going to shoot a question to Babatunde just quickly, but first let me just pull this through. By the way, in terms of the cost, so let me ask Ike, what are you comfortable with? 12%, 18%, inflation at 22%. How would you want this to go? Someone is worried seriously among our participants about the cost here.
Well, look, anything between 10 and 18%. Forget when we talk. At least as an investment manager, let's not look into inflation. Let's look at how we can still maximize our returns in considering what we want to achieve for our wealth. And that's what we should be looking at. And yeah, we can peg to inflation, but I call it chasing the sun. You get burnt if you're trying to peg to inflation. So these are things that help us reduce the the pain of inflation, but then anything between, as long as between 10 to 18 can work, I guess.
Interesting. I appreciate that. Babatunde, what's the approach at Stanbic IBTC or the banks to the non-cash backed MT 760? What was that?
So for the non-cash backed transactions, it's simple and straightforward. Usually the investors will have those securities held either by themselves or by their brokers or by their custodians. What will happen is they move those securities to our position as Onomea, the CSEs have mentioned, so that those securities are covered or held in trust before they are able to then decide to shop the market. So again, for those type securities, whether it's through S4, which is the central bank's depository system, the instruction will go forth for them to move those securities. If the securities are held directly at the CSCS, they instruct the CSCS also to move those securities like equities and certain bond types. Once those securities move into our position, then we go ahead in releasing the stock to the broker for the broker to go ahead to sell. So in a simple, straightforward manner, that's how that process will go.
But if the collateral value falls, no longer covers the value of the asset, what happens?
So every day we're required by regulation to do what we call a mark-to-market. So we run it through our system. We hold those securities in a globally accepted system where we do price valuation at close of business. So at the beginning of day, every day, we send a notification to the borrowers to indicate what the security that have been shot vis-a-vis the collateral is. So they see the position, they see they're well covered, they go to bed. If they see that they're not well covered, we do a margin call for them to add more to the securities that have been provided as collateral so that they are in an evil position and they keep the 120% cover every day. Just to mention, or 125%, depending on the security collateral. Just to mention that we have not had one single incident since we began transacting. And this is just to explain to investors on the call as well as participants that this is closely monitored and also regulated by the SEC that comes for risk-based supervision as well as on-the-spot assessment to know whether you're keeping to the terms and the rules of the laws.
All right. Thank you so much, everyone. We're going to wrap up the session now, but please permit me at the NGX before Kazim Alimi gets in from the NGX to say thank you to all of you and wrap up this very insightful conversation. Let me give just about 30 seconds to wrap up. First to Pencom, then to Franca from the SEC. Just if you have any quick words from what you've heard so far and what are the takeaways for you. Let me start with the Ibrahim Kangiwa at Pencom.
Well, for us, I think, like I said earlier, the objective is to broaden the space in which the PFAs are operating. We know the constraints within the economy. So anything that seeks to improve returns, fair returns, and also diversification in terms of risk management, the Commission is open to allowing PFAs. So far, we can do it within known parameters. We understand the risks and we have put in the required mitigants and risk management structures. We are very comfortable in allowing PFAs to go into securities lending.
Thank you very much. We appreciate your contributions. Franca Ebube from the SEC, you're wrapping it up for us. 1 minute, please.
Yeah. Thank you, NGS, for this wonderful webinar. And like I said earlier on, the SEC is committed to developing and regulating the Nigerian capital market. And with this respect to securities lending transactions, we want more liquidity in the market. We want to create more activities. And this is a very good platform to begin with. And we are hoping that with this momentum that we have taken, that the market will get better. We have more participants, more investors. The investors' confidence will be enhanced for us to move the market to a greater height. Thank you.
All right, thank you so much, Obe. Appreciation and regards to the Mr. Abasi, whom you represent at this event. Thank you. You've done a very good representation on behalf of himself and the Securities and Exchange Commission. Thank you so much. On behalf of the Nigerian Exchange Limited, let me pass the baton to Kazim Alimi for the closing remarks of this webinar. Kazim, you have the floor, please.
All right, thank you very much, Basim. Distinguished ladies and gentlemen, thank you all for participating in this laudable event. We are delighted at the deliberations, the contributions from various stakeholders during the webinar, and certainly the learnings from this training from this webinar today in terms of the presentations, and then also to the panel discussion, particularly where we had a lot of rich contribution, and then also to rich information and insights into the applicability of securities lending, the opportunities available for both retail and institutional investors through securities lending, as well as also to understanding the operational and regulatory framework around securities lending, especially given the recent developments with regards to the Business Facilitation Act of 2023 passed by the signed by the previous administration. The exchange is very positive that this webinar will serve as a catalyst to improve participation in the equities market on the sides of both institutional and retail. It's pertinent to note that vibrant securities lending will help deepen and boost liquidity in the capital market, also create wealth for investors, as we have seen in other jurisdictions around the globe. It is the exchange belief that would also be more, there will be more trading license holders that would want to be accredited as securities lending agents. We've seen some couple of interest already with this event already. We've seen some requests coming actively, and we're really delighted about that. I would, at this juncture, like to reiterate that the exchange is very big it's very big on investor education, capacity building of market participants. NGX will continue to leverage relationships and partnerships to engage various, to organize various workshops, webinars, and conferences to support market education, awareness of the products. Lastly, on behalf of the board of directors, management, and staff of the Nigerian Exchange Limited, I would like to thank our regulators, the SEC, and also to the PENCOM as well. And I also like to extend our gratitude to exchange partners, Stanbic IBTC, Cardinal Stone, even CSCS as well, ABSA as well too. We are really delighted about this, and then also too, we are really happy with the contributions from the panelists, and then also to the compare as well too. So Mrs. Franca Bebube, Mr. Ibrahim Mikangiwa, Mr. Obuche of PENUP as well. We're really delighted about your contribution. Mr. Babatunde Majiango from Stanbic, and Mr. Ike as well too, from Coronation as well, representing FMAN. Ms. Onome as well, we're really happy about your contribution here. And then Mr. Peter as well, from Cardinal Stone and Ronke, as well as Singing and Boasim. We're really happy about the contribution here for the tireless effort that you put at this, and we're really delighted about this. My profound gratitude also goes to all stakeholders as well, and the investing public. Your participation is very much appreciated. Thank you all, and enjoy the rest of your day. Thank you.
Thank you so much, Kazim Alimi. And let me just say thank you to everyone once again, and to tell all our participants that more than 400, nearly 500 participants on the line from here and outside the country are watching this, following this webinar, Securities Lending, very closely. That's so shows so much interest that investors, participants, and everyone has in the Nigerian exchange, and what the exchange is doing as the frontier for African financial markets. Thank you, everyone. The presentations made by Runke and a few others will be shared for the participants who have formally registered with the Nigerian Exchange Limited for this event. So keep that in mind, be sent via your email addresses. Thank you so much, everyone. Do have a great Wednesday, and I'll see you soon, everyone. Bye for now. Thank you so much for being part of this. Thank you to Nigerian Exchange, the SEC, and other partners. Bye-bye.
partnering globally.